Welcome back to the channel. Today's topic is something my children and I discuss constantly. So much so that we even created a quirky award named after it. The Golden Parachutes. This award goes to the person who leaves their money alone. In other words, the investor who stays engaged with the market through buying consistently without any major interruptions. Yes, sometimes we wish we would take some profits if the market gets too frothy, but 99% of the time we want to keep the faith. Over the past 10 years, stock and bond funds did quite well. If investors simply purchased them and kept the money invested, they would have reaped great rewards. But unfortunately, that's not how most people do things. Instead, they make frequent trades buy when others are greedy and sell when others are fearful. In doing so, they pay hefty fees and they pay them again and again, compounding those costs over time. The good news is that the problem isn't hard to fix. If you'll just follow these 3 steps, you can start reaping the benefits of the market without touching your investments. Number 1, forget about the day-to-day movements of the market. Remember, the ups and downs of the market are normal and expected. When everyone else is focused on short-term price fluctuations, you can stay grounded and keep the bigger picture in mind. You're playing the long game. Prices will rise and fall. There will be times when your investments lose value, and when that happens, it can be tempting to sell. But you need to resist that urge. Stay invested. Selling when prices are low is a common mistake that can reduce your overall returns. Number 2, resist the urge to time the market. Timing the market means trying to predict when prices will go up and down. And here's the honest truth. Even professionals can't do it consistently. Trying to guess the unpredictable can lead to costly mistakes. Instead of trying to time the market, focus on investing consistently. Dollar cost averaging is a powerful strategy. It involves buying a set amount of money worth of investments at regular intervals regardless of the current market conditions. By doing so, you buy low sometimes and high sometimes. You eliminate the stress of trying to find the perfect moment to invest. Number 3, don't be swayed by political or economic changes. Now, changes in leadership policies or global events can create short-term volatility in the market. It's natural for investors to feel a bit nervous during such times. But here's what you need to remember. Short-term uncertainty doesn't change the long-term prospects of a diversified portfolio. Since you're a long-term investor, these changes shouldn't significantly impact your investment strategy. Stay calm and keep buying. Following these steps may sound easy, but implementing them requires discipline and patience, but the payoff is huge. According to a study by Fidelity Investments, the average stock market return for 10-year periods since 1966 was over 10%. However, the average investor only achieved around 5.5% due to their behavior. In other words, by simply staying invested and keeping your hands off your investments, you can potentially double your returns over the long term. Imagine this. You invest $1,000 at the beginning of each year for a total of 40 years. Assuming an average annual return of 8%, your portfolio could grow to approximately $1 million. But if you try to time the market and only achieve an average return of 6%, your portfolio would be significantly smaller. Now, here's a golden rule. Avoid investing in individual stocks unless you're actively managing your portfolio. Instead, consider investing in target date funds. They typically invest in a mix of stocks and bonds, and over time they become more conservative. In conclusion, there's a clear path to building wealth in the stock market. Put your money in, keep it there, and let the power of compounding interest work its magic. Stay focused on your long-term goals and ride the waves of the market. It won't be easy. There will be challenges and moments of doubt. But remember, the greatest fortunes were built during tough times, and the journey to financial success is a marathon, not a sprint. Stick to the plan, stay disciplined, and you'll be amazed at where your investments can take you. If you found this helpful, make sure to like, subscribe, and share it with your friends. Thank you for watching, and until next time, happy investing.